Hi, this is Lex, and welcome to the Fintech Blueprint. It's your podcast about fintech, decentralized finance, digital banking, investing, robo-advice, artificial intelligence, and all the other frontier technology that is transforming financial services. To get more content, like an illustrated transcript of this conversation in your inbox, subscribe at fintechblueprint.com. So without further delay, let's jump into today's episode. Hi, everybody, and welcome to today's conversation. I'm really excited to have with us today Arun Kumar, who is the CTO of Socure. Socure is one of the most successful identity management and risk assessment companies in fintech, and I'm really excited to learn more about it, as well as to talk to Arun about his journey. With that, Arun, welcome to the conversation.
Thank you, Lex. Really excited to have this conversation with you today.
Fantastic. So one question I have about your career, because you've done a lot of high-profile stuff, is to ask, what kinds of systems are you interested in? What kinds of structures do you like building?
No, that's a really good question over there, Lex. I love building very large-scale systems. I mean, one such example is when I was at Amazon, one of the systems that we built on the consumer side was scaled to 100 million transactions per second for, operating for like Prime Day. And again, when I went into Citadel, of course, we were dealing with some very large scale systems in being able to scale to the volumes of the stock exchange. So those were some like really interesting problems to solve. So really high throughput, low latency systems is something that, gets me really excited. But then layering on top of it, I get really excited by using machine learning and deep learning on top of these systems, and scaling those type of systems to be real time is something that I'm truly passionate about from a technology perspective.
How did you get into the position to be able to take on, these big challenges? Like, what was your path into the first one of these that you had to deal with, and what were some of those early lessons?
Yeah, no, my career started with Bloomberg, where again, dealing with large scale financial systems, I was thrown in on the deep end of being able to figure out how to run low latency systems, how to run real time interactive systems that are highly responsive. And there's a whole different element when you're dealing with, humans that are interacting with systems versus systems interacting with systems, because there your latencies need to be so low and you need to be able to operate at such high transaction volumes. So I got the flavor for it when I started my career at Bloomberg, working on a variety of different teams over there. And that's truly where I found my passion. And I started off as a software engineer, working very deep in like low latency systems over there. It's just something that I've honed over many years now, and just continuing to operate in these really hyperscale environments.
Yeah, so you spent over a decade in and around financial data and then moved to Amazon. And it looks like there was the emergence of machine learning at the time. What was it like to go from, like delivering information to trying to, I guess, connect to human behavior in a way?
That's a really interesting question there, Alex, where I saw that were just so many overlaps. Like if you think about Amazon.com, I mean, when I was there, we had tens of billions of products in the Amazon catalog, and you had these billions of customers that were, shopping around for a variety of these products. And it's a very similar set of challenges in terms of, whether you're surfacing stocks and stock prices versus products and product pricing information, and finding the best deal possible, which will really optimize for shipping and all these other factors, and being able to get the best price to a customer. So there were some very interesting overlaps in the financial services world to the world of consumer goods. and really operating at that size and scale. And I think what was really interesting there, Lex, was understanding the fact that, there's just these similarities, but then there were a lot of things that we even did at Amazon that, really needed to be scaled up. For example, we're using a lot of machine learning in trying to find out, different attributes of a product. As a simple example, on the Amazon catalog, like you're selling, say, pens versus cans of Coke. Now, as a seller, we would just get like descriptions of the product that we're being sold and images of the product. So we had to use a lot of machine learning to understand that this was a pack of 12 pens and this is a pack of like 10 cans of Coke. But then the measurements are very different because a can of Coke could have 300 milliliters of liquid in there, whereas a pen, you're not really measuring it in that dimension. So using machine learning to be able to extract all those facts at scale was a really, really interesting problem for us to solve. And then scaling that system to the levels that I talked about, 100 million transactions a second, was just a really, really interesting twist on that problem, if you may.
When you have to work at the scale, like, are you thinking about specifics or are you thinking in the abstract? I can imagine you create some sort of solution that works for 99% of these billion people, and then at the edges, there's 100,000 that are kind of lost in edge cases you could never have predicted. How do you design both at like that hyperscale, but then also figure out the human experience?
No, you really hit the nail on the head with that, Lex, where, when you're building these core systems, you do really build for these, like, you're never trying to build a solution that's going to work for 100% of your use cases, because then you end up in this like vicious cycle of trying to build for like every possible use case. And it's just impossible to do that. So what you typically do when you're building these type of systems is to really go for the like set of 99% of your use cases, and then take a different tack or a different approach towards solving for that exception set of use cases. And that exception set of use cases, you're not really looking to build those at scale. You're really looking to go very, very deep into those exception use cases. I mean, we had this challenge, for example, at Amazon, where we had to deal with like customizable products, or products that could be tweaked in different ways. Or we had this other challenge where there are products that are being sold as bundles. So we chose to deal with those kinds of products and these products on the edges with a completely different set of systems, because obviously, because they're on the fringes, you need to think about it in a different way, where you're really going into the detail but not really thinking about scale, because that's your 1% problem. That's your 0.1% problem. That is not your 99% problem.
So after Amazon, you went back to finance with Citadel. And I'm curious as to how much of the software stack overlap is there between the big tech firms and then sort of leading quant shops like Citadel? Like, how similar or different was the technology and even maybe like the development process?
Yeah, so there were two aspects of this, Lex. There were certain problems that Citadel was solving that nobody in the world really was solving. So this is sub-millisecond latency problems. And, at places like Amazon, you're dealing with a lot of like, consumer-based transactions where your latency is like, the human eye can only respond at a certain rate. So, to the point where, you can press something on the computer. So the minimum latency that you can ever get to with a human is about 20 milliseconds. So with these systems, you're dealing with sub 1 millisecond latencies. This is for all these like high frequency trading use cases. And there we really had to go deep at the hardware level to think very differently about how you solve for those problems. But then we also had other use cases where we're bringing in massive data sets, whether it's like weather data or consumer spending data and things like that, where you've got these massive data sets, and you've got to do some very similar things with those data sets to be able to glean some patterns from it, to be able to extract information and be able to make trading decisions off of it. So there were two types of problems. I would say one set of problems where you're dealing with these like very large data sets to glean insights and make trading decisions. It was very similar to the problems that we were solving at Amazon. But then when you go into this like whole low latency space, it's a very different set of problems where you're trying to micro optimize, where it's like, okay, the speed of light through fiber is not fast enough for you. So then you start setting up like microwave links to be able, because, microwaves travel faster through air than light does through glass. So it was just a different set of problems over there in that low latency space.
That's really interesting and masochistic. So what pulled you towards joining Socure? How did you find out about the company? And then maybe, we've gotten a sense for the types of large scale issues that you build around. Draw for us the parallels for what that problem is.
I'll start with, how I even found out about Socure. So one of the investors in Socure was closely connected with our CEO, and I was closely connected with them as well. And then they introduced me to our CEO, Johnny, a couple of years ago now. And we connected, and I was really not exposed to this whole space of, identity and identity verification. That as we started talking about it, it again became a very similar set of problems that Socure is solving to what we were solving at Amazon for the catalog. If you think about it, there's billions of people in the world, about like 8 billion people in the world. There's billions of devices in the world. And there's all this like real-time activity that's happening. And as technology is getting more and more accessible, fraudsters are getting smarter and smarter every single day. And the key was to build this like identity graph of everything in the world, whether it be some of the core identity elements, and then phones and phone numbers, and then device and device profiles. So then you're able to tell things like, wait, this one device was used to log into 1,000 different identities. Now, that's not a very practical use case or a scenario for a genuine use case. And it's a very high likelihood of fraud happening in those type of use cases. And to be able to build this like real-time identity graph where it's constantly getting this information from, a variety of different elements of like activity over the internet. And if you look at it, right, like transactions, ever since the pandemic, this has really skyrocketed in terms of, transactions in physical stores versus transactions that are happening online. And directionally, right, like this is only going to keep increasing, and the attack vector continues to increase. And so the engineering problems were really fascinating. But I think beyond that, something that really struck a chord with me was, this has true impact in the world in terms of protecting every single person's digital identity. And that got me really excited in terms of the mission of the company and what we could accomplish in terms of, protecting every single transaction in the digital universe.
Help us get the sense for how big the company is.
Sure. So currently, we've got about 2,700 customers across a variety of different dimensions. We cover 9 out of the 10 top banks in the country. We work with over 30 state agencies. We recently closed a contract with login.gov that's going to be powering a significant number of all federal agencies. So in terms of breadth and scale, we're really, expanding out in so many different areas. And these two-sided consumer marketplaces, that's another area that we're rapidly expanding. And then from a volume and transaction standpoint, if you look at it, we hold tens of billions of records on identity elements. And then from a transaction volume standpoint, we deal with like hundreds of millions of transactions every single month. So if you look at all of these put together and building this like real-time identity graph that's powering all our decisioning, I mean, the scale really gets there. And today we're mostly operating at that login and account opening space, and we're starting to make inroads into the transaction monitoring use cases where that scale is just going to go up by 10x or 100x as we start going into the transactional volumes. But, in terms of size and volume and scale, we're really up there in terms of just being able to put all these signals together to be able to detect these fraud rings in real time. And then company-wise, size-wise of the organization, we're at about 450 employees at the organization, which also makes it really effective for us to be really small and agile and nimble to be able to attack these problems.
I think the last big funding that you had was in 21 with a 450 million round at a $4.5 billion valuation. So I think there's been some more capital that has come in since then, but quite mature as a company. How did the company get built to have this position in the industry, right? Like if you are the identity solution for the government, or if like the banks themselves are outsourcing this key function to you, tell us a little bit about like what it took to go to market and what were the key levers to get to this scale.
I think what we did as a business strategy was really smart here, Lex, where we started off with some of the biggest names in the industry. We started off with some of these like really, really large names, like the large banks, for instance. We started there in really working closely with them and identifying, where they weren't able to move fast enough, where we could move so much faster, being a startup, being able to build these models. And what was kind of interesting was, Socure started with a very large percentage of the workforce being data scientists. So there was a very heavy, leaning towards building these really complex models on top of the data to be able to decision very quickly and be able to make much better decisions than what these banks were able to pull together in a short period of time. So I think that really helped us in gaining momentum. And then after we got the first set of banks, we were able to see enough transaction volume. And I think that's really our differentiator, is this network effect. Now, each one of these banks, they only see their own transactions. Now, if you have someone who's seeing the transaction across 9 of the top 10 banks, you're pretty much seeing every single consumer in the United States. You're seeing every single transaction go through. So you're able to detect a lot of the fraud that's happening because you have this network effect going into the organization. And it just creates this flywheel where as we acquire new customers, we're getting better and better and better. And it just helps us make even more compelling decisions in terms of where there's fraudulent transactions versus not.
So when you say you're seeing it across multiple banks, it's like you're seeing an IP that's persistent across somebody logging into Bank of America and JP Morgan. Like, what does it actually mean to have that identity graph? Like, in which way are you able to go across the different data points?
No, absolutely. There are like easy ones, right? Phone numbers, for instance. If they're the same phone number is being used in combination with, 1,000 different emails, that's a significant risk signal, for instance. We see devices. So, we're integrated into the front page of most of these banks, for instance, or within their apps. So as we start seeing different devices, it's like, okay, I'm seeing this device with the same set of like PII information, right? Whether it's social security number or their first and last name or the device they're associated with or their phone number and address, we're able to pull all of these signals together, and then IP address being one of them. But like, we use so many different data points that we pull together where we're able to say that, okay, this is truly this person's identity. So if we usually see Lex on, one laptop and on 2 mobile devices and maybe an iPad, but then all of a sudden we see Lex now logging in from, an Android device, whereas Lex is typically an Apple user, that's a risk signal. And then we start seeing that, we see you from Comcast usually, but now we're seeing you from a different internet service provider on a completely different set of IPs in a completely different geolocation. That starts elevating the risk profile. And then if we start seeing Lex associated with this phone number that was used with like these 1,000 other identities, then again, that starts raising that risk profile. So we're able to immediately raise some of these flags. And there are different ways in which banks will deal with the elevated risk factors, whether it's like sending these one-time passcodes to your phone to verify that you are who you are, or, having to do some level of like document verification and things like that. So those are some of the ways in which we prevent fraud.
I'm curious as to what are the most common attack vectors that you are preventing. I'm also curious how that has changed over time, since the company's founding, because I'm sure that things have gotten a lot more sophisticated. But, are there types of activities that you're seeing all the time?
It's just amazing, Lex. Like, you look at technology being accessible to, these type of good behaviors, but then it's just as equally available for bad behavior. So one of the recent things that we saw in terms of pattern was now there's like these things called fraud GPTs that are available in the dark web for fraudsters to be able to, carry out these attacks. There's TikTok videos that show people how to commit fraud. So that's rampant. And then the other thing that we see a significant pattern around is using deepfakes. Recently, with one of our customers, we saw that the same image, the same face, the same profile was being used across about 1,700 different driver's licenses, where this fraudster had created images of these different driver's licenses across so many different states and just like bolted on various personally identifiable information elements on it, and then used their same face and was using a deepfake video, because a lot of these like applications will also do like selfie re-verification. But because, again, we were able to see that same image vector across so many different dimensions, we were able to quickly identify it and block it. So it's just, really interesting in terms of, how fraudsters are getting more and more sophisticated. So then we also put measures around, when they're using deepfake videos, you can use things like detecting the accelerometer on your phone to see if, it's just tied to a certain device, and like, are you moving your phone around, and then like typing patterns and things like that. But I'm sure, right, like they're going to get smarter and smarter and figuring out ways to, move the device while they're doing it. So we're constantly having to evolve. And one of the things that we're doing in more recent times is, this concept of a red team, where we're constantly coming up with like new fraud patterns so we can mimic some of these like fraud behaviors. So we can constantly stay, multiple steps ahead of how fraudsters are, taking advantage of the situation of technology being just so accessible.
How do you see that evolution of, deep fakes and generative AI? Like, how feasible or easy is it to spot this stuff? Or is it going to kind of run away at some point, you think?
One of the bigger pieces over here, Lex, is as things get more digitized and automated, we're able to put more protections in. Like if you look at, for example, this whole drive towards mobile driver's licenses, because then you're verifying a digital identity and the device that it's tied to, and there's much better security measures that you can tie along with that versus, having a physical document, which is only getting easier and easier for somebody to replicate that in the digital world. So I think that move and shift towards digital identities is going to be so key and critical, and having this concept of digital wallets and digital identities with, more and more sophisticated biometrics that we use in order to authenticate an identity. Unfortunately, though, right, like there is a significant proportion of the world that is still relying on these like physical elements of identity that make it much harder with how deepfakes and generative AI are making it for fraudsters to be able to conduct these attacks. So I think that's one element of it. But I think having this like network effect is a really, really powerful way to combat it because, again, right, like there's not a lot of, you got to raise the bar and the cost for committing fraud. So, the moment you start detecting that, okay, a single device that's committing fraud across so many different areas is no longer feasible because it gets really expensive and you're able to block it very easily. Now fraudsters are going to have to buy, hundreds of thousands of devices. And then as they start doing that, they've got to go on to like hundreds of different networks, for instance. So you start to like keep raising the bar for committing fraud that like it gets harder and harder. So we're constantly looking at ways in which we use generative AI and like, deepfake detection technologies to constantly stay multiple steps ahead.
I'm still quite interested in, the shape of the business and how you acquire customers and then also how you serve customers. Maybe we can talk about the latter first, which is, of the customers that you have, what's the shape of the organization to support them and to maintain the integrations? Like, do you need to have lots of solution architects? Is integration very manual or is it completely productized? Like, what does customer success look like? Can you talk about that aspect of it? Because, it's such an important function for the businesses.
Absolutely, Lex. And actually, this kind of dovetails very nicely into our recent acquisition of Effective. That was one of the biggest pain points that we saw with a lot of our customers, where it required significant amount of engineering effort for our customers to integrate our products and solutions, because most of our solutions are API based, where a customer has to code to our APIs, integrate with it, and then whenever they wanted to make any changes in the way in which they were calling our APIs or calling it at various points within their integration points, it was pretty manual, required a lot of heavy engineering lift. Now with the acquisition of Effective provides a solution where it's very similar to the concept of what Shopify or Stripe did in the payments industry or in like setting up these like e-commerce websites where it's like 2 lines of code. Now you're able to, do all of your payments processing without having to directly integrate with like Visa and MasterCard and all these different providers. And that's really what Effective did for us, where they really have this like, couple of lines of code, drop it into your integration point, and then everything is managed in this like no code solution, which is all UI based. So you no longer need engineers to be able to configure a lot of these flows and configure some of these models to make them really, really customized for their specific use cases. So this, we're looking really, really excited about like, bringing Effective in to accelerate the pace of deployment and lower the cost for a customer to integrate us. And then also from a solution consulting standpoint, from our side as well, to help them with their implementations, because everything now gets configured in the UI. And then one of the other challenges for a lot of our customers historically was, they would have existing solutions or homegrown solutions that they would have built historically. So how do you empirically show that Socure solution is performing better than the previous solution? So they would have to integrate in such a way that they were then capturing metrics of running us in shadow mode and then running their current solutions and then comparing the results and then flipping it over. Now, with this integration of Effective, we're able to do all of that behind the scenes, where you can look at all the results on this Effective dashboard. You can look at their live transactions. You can look at our transactions and then see how much of a lift we're able to provide to them in eliminating fraud or massively reducing the number of fraudulent, use cases they let in. And then also saying yes to good customers that they said no to, because we're seeing like good behaviors across some of these elements, across our network, across our consortium of customers. So we're really, really looking forward to this integration radically simplifying our ability to integrate with new customers and with existing customers for them to be able to configure their flows.
How does this scale up when you add new customers? Is it chunky and kind of you have to add to this part of the business, or is it a fixed cost?
No, it's really a fixed cost over there because and as I was explaining, like with the effective acquisition, now with even new customers, instead of them today requiring, tens, if not hundreds of engineering hours to do the integration, it's going to take all of like 30 minutes for an engineer on their side to integrate us. Now, that massively reduces the amount of engineering effort on their side. So, when we talk to new customers, we're able to say, look, this is like 2 lines of code, drop it into your your integration points, and that's it. You're off to the races. Versus, historically, it's like, oh, here's the developer documentation. Here's all the different steps you need to do. Here's the API that you need to code to. So we just massively simplifying the integration. So even the fixed cost starts coming down as we start like rolling out this like combined, effective, Socure product out to the market.
And then that second part of the question around going to market and acquiring new customers, like what's the sales motion? How easy or difficult is it? How long does it take to close a customer? Like you have to prove to the enterprise that you can fulfill the product promises. Is it very hands-on or has it become more automated over time?
Something that we do that's pretty interesting with a lot of the large customers to really truly prove value, again, in a very empirical way, is what we do is we run these things called POCs or proof of concepts, where what we'll do is take their historical transactions over, say, the last 6 months or the last year. And obviously they have data on, which of these were fraudulent, which of these weren't. And we'll get these labeled data sets working closely together with their data science teams of saying, these are the customers that they said yes to, but they turned out to be fraudulent. And these are the customers that they said no to, but they have no idea, if they would have turned into fraudulent use cases, or they were genuinely good customers, but they were thin file customers that they just didn't have enough information on. So they ended up saying no to them. So then we take that data, run it through all of our systems. We do the analysis to say, we would have said yes to these customers and we would have said no to these because we saw fraud in all these different use cases. And this is the business value and proposition of, the fraud losses that we would have prevented for them if we were, plugged into their enterprise solution. And then these are the number of customers that we would have said yes to. So there's so much more in revenue for them. So typically when we do this analysis, we find that, there have been cases where we've shown a lift of hundreds of millions of dollars for these, large customers where they said no to a number of these users that, they could have potentially said yes to and had so much more in revenue. So that's a big part of our value proposition. So historically, a lot of, generating those decks, doing the analysis was all very manual. And now we've used a lot of generative AI to be able to automate generation of all this analysis. So it makes it very turnkey for us to be able to take that data in, process that data, and give the results back to the customers. So now they're able to see the value much faster than, historically we would run these like massive jobs over a period of time and then do the readouts to our customers.
You mentioned this transition from the account opening, the initial identity verification towards transaction monitoring. Can you paint a picture of the product roadmap? Where did you start and how is it developing over time and where do you see the product going in the future? You already have a pretty broad platform and a pretty sticky asset in terms of that reputation graph. What does the company continue to evolve into over time?
I think if I had to summarize it in one word, Lex, it's all about efficiency and actually 2 words, efficiency and scale. So we're constantly looking at ways in which, like our cost of customer acquisition, for instance. Historically, it's been very high touch, where there's just like multiple interactions with the customers in order to, acquire a particular customer. As I was explaining, there's a lot of like manual elements that we're looking to completely automate. even from an engineering perspective, we are looking at ways of being much more efficient in the way in which we do things. So, there are several teams now that are operating about 45% more efficiently than they were before. Like when we look at our sprint velocities and things like that. And it's all because, we're using generative AI, for example, to generate all our test cases for the engineers. Or, from a standpoint of solution consulting, as I was saying, right, like simplifying these integration points because it becomes so much easier now for you to implement our solutions. And then we've used generative AI to also do a lot of work around understanding where, say we say no to a particular use case, and then we're able to quickly generate insights into why we said no using generative AI versus having somebody on the customer support team go really deep and expose some of the logic behind why we would say yes or no to a particular transaction, for instance. And then also from a scale perspective, we're starting to look really, really deep into our code base to see how do we run so much more efficiently with our code to be able to continuously lower the cost per transaction on our side so we can truly go into this like transaction monitoring space and really not pass that on to our customers, right? Like as we keep increasing our efficiencies, we're able to pass that back on to our customers as well. Everybody wins as a result. So a big, big, big piece of this is all about, how do we continue to grow this while we keep improving our efficiency and keep increasing our scale at which we're able to operate.
Are there parts of the business that, maybe didn't work as planned or where you had made strategic mistakes and then corrected them? Because, everything so far sounds invincible, which is amazing. What were some of the stumbling blocks maybe that you came across and learned from?
I think this is true of any startup journey, Lex, where, for a lot of the initial customers, we went and bent over backwards in, fulfilling some of their needs where we built custom solutions. And that always creates issues because, recently we had an issue with one of our customers where we built something so custom and bespoke, and that like custom bespoke implementation broke. And there was literally nobody in the company who even knew what that implementation was or why that implementation was done, because it was done like 8 years ago. And nobody who was even associated with that specific implementation is no longer with the company. So I think that's one big piece around, standardizing how we approach things. And you, of course, need to do that, in your early days to do a lot of this like custom bespoke implementation. But it really comes back to bite you when, you're looking to grow and scale. And, the more custom one-off things that you do, the more there's a chance that, nobody even knows why that was done or how that was done. So, I think we are going through this exercise now of unwinding a lot of these like custom things that we did, having those dialogues with those customers to say, look, it's creating a risk on both sides, right? Because the more of these like custom implementations you have, the more the teams have no knowledge of these, and, maintaining that where, you're one out of the 2,700 customers that have this implementation, and it just adds the complexity to how you grow and scale. So I think there is a significant amount of work that does need to go into simplifying and standardizing our, entire stack to be able to make sure that like we're serving everyone in a consistent way.
Yeah, absolutely. What do you think the shape of your clients looks like in the future, especially as we, project further and further out and deepen the product stack? You already have pretty significant market share. Do you expect for things to start including more big tech firms? A big part of the embedded finance thesis, for example, is to find financial products all over the internet. How do you think about growing the total addressable market as well?
No, absolutely, Lex. Like even today, when we look at the number of financial transactions that are going on over the internet, we today cover barely about 1.5% of all the transactions that are going through. And, so we're still like covering a very tiny segment, even though we're a pretty significant player here. I think the next big step, as you point out, is definitely these like large e-commerce marketplaces, right? where, you just have such large volumes of transactions going through. And how do you validate and verify and ensure that every one of these transactions is legitimate? And even on the government sector side, right? We all know, during the pandemic with the Small Business Administration, right? These PPP loans that were being handed out, there wasn't a lot of scrutiny. There wasn't a lot of validation. So I think there is a need across a lot of these large use cases where, there's significant financial activity to be able to provide that layer of protection. So I think that's a significant area of growth for us in just looking at where the industry is moving and where these financial transactions are happening. And there's more and more of these platforms that are starting to enable, various ways to do payments and transactions. And how do you protect all of that? So I think that's one of our key areas of growth, is just going where, the industry is moving in terms of where these financial transactions are happening.
Absolutely. I think not only are things getting far more financialized, but people are also much more used to transacting in places that they never would have before, taking out loans where they never would have before. I think that behavior is only going to accelerate. Well, with that, I want to ask if our listeners want to learn more about you or about Socure, where should they go?
I think the easiest would be just reach out on LinkedIn. I'm very, very responsive over there. That's probably one of the easiest places to reach out and connect. I'm more than happy to engage with anyone who has thoughts or ideas or, just wants to talk through something or has questions. More than happy to answer there.
Fantastic. Arun, thank you so much for joining me today.
Absolutely a pleasure, Lex. Thank you so much.
Hi, everyone. That's it for this week's episode of the Fintech Blueprint. For more technical deep dives into all things fintech and decentralized finance, check out fintechblueprint.com and grab a free subscription to the newsletter. This is Lex, and I'll see you next time.